Welcome to Market Call. Thanks for joining us today. I'm Mariela Fernandez. Javed Mirza on the show. He's a technical strategist at Raymond James. He is taking your questions today for technical analysis. Here's how to reach us. Call us toll free, 1-855-326-6266. You can email your questions to us as well, marketcall@bnnbloomberg.ca. Thank you for coming in.
Thanks for having me.
So you are noticing changing patterns that could lead, you say, to a correction. Tell me one or two trends you've noticed so far.
Yeah, so basically we've been highlighting over the last couple of weeks four developing technical negatives that suggest equity markets are a little bit stretched here. So to kind of give you a recap, at the start of the year, we were very cautious. We were looking for this bigger correction that happens every, call it 3 to 5 years. We think we got that from February to April, and then we had that low, and then we told clients, look, there's a tradable low here, but we didn't realize it was going to be the low, and the correction, the recovery was really, really quick. So in June and end of May, early June, we started telling clients, look, hey, there's an intermediate term rally underway with upside into August. And then in early June, we told clients, look, we think a new 4-year cycle or 3 to 5 year cyclical bull market is underway. What we've been noticing over the last couple of weeks is that investor sentiment is starting to get a bit too bullish. Understandably, we've had a 30% move off the lows. The other thing is we saw signs that, or seasonality at least, is telling us that August and September are typically the weakest months of the year. So that's looming. And then just shorter term price momentum has been stalling on a variety of indices. And then underneath the surface, we're seeing a lot of the leadership names that were leading this rally are now starting to show signs of kind of giving up the ghost. So all of these things together tell us there's going to be an air pocket, call it 5 to 8%. But we'd be using that air pocket to add exposure because we think we're in a new bull cycle that has upside into the second half of 2027, first half of 2028.
You said there are some leadership ones that you're sort of noticing the change in. Can you name one or two in what you've seen?
Yeah, exactly. We've been highlighting a variety of names in the US specifically. So names like Axon, Howmet, Booking, Royal Caribbean. They had broken out to new highs, which is very bullish. They were telling us they were the leaders in this new cycle. However, over the last couple of weeks, they've started to break down. And not just in relative terms, but also early signs of absolute breakdowns. And this is telling us that the leaders are breaking down, and this typically suggests that a bigger correction is likely to follow suit. And
when you are looking at this, it's North American-wide or specific to the U.S. market? What are you seeing? Yeah, great question. So we look globally. We look at a variety of stocks in Europe and Asia. But our focus is North America, and that's where 90% of our research comes from, or that's where we do 90% of our due diligence. And in that market is where we're seeing a lot of these early signs of weakness and or breakdowns. Don't get me wrong, there's stocks that continue to power higher, and the market to us, we think, is very attractive. And at the start of a new bull trend, we think intermediate term things are priced to perfection here, I would say, and I think we're going to get some sort of air pocket or weakness. So we'd be looking to add exposure on weakness here. Weakness usually lasts for a certain amount of time. I'm just wondering if you could predict how long a weakness will last. Yeah, so I mean, you get these short-term pullbacks. Typically, they last 1 to 3 weeks. I think that's what we saw over the last couple of weeks, a short-term corrective phase. Looks like markets are starting to grind higher, and typically that advance phase is, call it 2 to 4 weeks. If we're correct on our bigger call that we've got that intermediate term correction, they typically last 1 to 3 months. So an example, there's 2 ways you can correct. You can correct in price. That's the way most people think of it. However, if we can pull up the chart of gold here, I can show you just over the last 6 months, I can show you that gold is correcting in time. And what I mean by that is it's just essentially, so perfect, you guys have it up. So here's the bigger move higher. And then what you can see here, so here's the uptrend, but notice over the last couple of months, we've been consolidating in a sideways trend. So that's the other way you can consolidate was in price. Oh, sorry, in time. Got it. Okay, we're going to take a quick break. We'll line up some phone calls for Javed Mirza of Raymond James, taking your questions on technical analysis today. Here's how to reach us. We're back in a moment. Welcome back to Market Call. Thanks for joining us. So we are going to start with an email from Mark. He says, I'd like your analysis on Bird Construction. Bird just did report the earnings, and they are experiencing a lot of delays for projects. I guess some of the projects people are uncertain about the future, and so they're not canceling the projects, but they are delaying. Which is sort of working through Bird, but they do have a huge backlog that they are relying on. So let's take a look at Bird and tell me what you see.
Perfect. So here's kind of that consolidation in time that we were talking about. So if we can pull up a 6-month chart, I think they reported today, our analyst, Fred Bastian, has done an awesome job. He's been very bullish on a lot of these names in this area. And we've worked a lot with him over the last couple of weeks because we've been highlighting across his space, not just Bird, but a variety of other names in the construction and engineering space. Like we've been talking about Atkins Realis, Stantec, WSP. So a lot of these names have had monster moves, but are now correcting. So you're coming right back to important support around 24.50, and then the next big support level is going to be here, call it around 22. So I think we'll probably get a little bit of a dead cat bounce. If we're correct on our correction call, we're likely to chop around for a bit more. So for Mark's question, I don't mind nibbling here. I think today is going to be timely to nibble a little bit. I'd give it some more time over the next month or so, especially since we think there's a broader correction coming. And that's what we would be really using to start adding exposure, call it. Once we get through this correction, call it in September.
Got it. Okay, let's go to the phone lines. And Costa's on the line. He is in Montreal today with a question. Hi, Costa.
Thank you, my friends, for taking my call. I appreciate you. Mr. Mirza, what does your knowledge tell you about Constellation Software? They reported on Friday last week. Everything looks great. Why is the stock dipping? Would you buy at this level? Thank you very much. Have a beautiful day, my friends.
Okay, thank you for the question. We will pull up Constellation Software at 4,474, actually down today at $33. And down over the last 6 months is what we're looking at. So you mentioned there's a lot of consolidation happening. With Constellation Software, we're actually seeing a drop-off here. Mm-hmm. Are you surprised by that drop-off, considering they are in sort of the software space and benefiting from AI?
No. So can we pull up a longer-term chart over the last 3 years? So I think, and Costa, thanks for this great question. I think this is exactly an example of what we've been talking about. So here you've had this really big move. This has been a leader to the upside, but now it's showing signs of stalling and breaking down. So that reaffirms our view that we're in this corrective phase. So we've been talking to clients about this. I definitely don't mind adding here. The only thing is we've moved below the 200-day moving average, which is typically not a great sign. So if we're correct on our call that we think there's more weakness coming, same view that we're going to have for most of the stocks here today, especially the ones that are correcting, is I don't mind nibbling a little bit here, but I do think there's going to be a better opportunity, call it, in the next 1 to 2 months or so. So as we get through September, maybe even into October. So if we come back to the 6-month chart, I can kind of highlight where I think we're going to come back to. So I think the 200-day is right around here. We tested and held and bounced off it, and then we've moved back below it over the last couple of days. This 42.50 level was support during the tariff tantrum back in April. That's definitely where I'd be looking to add a little bit more exposure. So don't mind adding a little bit here, but would prefer to add a bit more around that 42.50 level.
You mentioned how much of a correction you think you're seeing. I think you said 5 to 8%. Exactly. So I'm wondering, because tech has been so bloated for such a long time, could we expect the larger correction to happen in that kind of sector as opposed to others?
100%. And that's basically based on this metric called beta. And so what beta is, the average stock or the market has a beta of 1. If you're more risky or volatile, that number goes above 1. So let's say 2. And if you're a less risky, boring stock, like let's say a grocer or a garbage company, then your beta is lower, so 0.5. And this is what portfolio managers do, is once you get into these corrective phases or where things are getting a little bit volatile, they want to buy boring businesses where they have low beta. And so Constellation as a stock probably has a beta of, call it 150 or 2. Or typically these software, high growth, high cyclical companies have high betas. So if the market's up 1%, it'll be up 2 or 3%. But that works both ways. If the market's down 1%, these names are down 2 to 3%. So that's why I do think there is more downside coming here in Constellation. And it's funny, we're actually going to highlight this as one of our charts in our weekly note this week, but I saw that it was oversold and looked like it wants to bounce right at the 200-day, which it did. So this does really suggest that I think it's going to test the 42.50 level. So that's where I'd prefer to add some more exposure.
Got it. Okay, let's go back to the phone lines. John is on the line with his question. He's in London, Ontario. Hi, John.
Thanks, Mariela. Hello, Javed. Maybe we should look at small caps. How about these two? Kraken Robotics, the undersea robotics company, and the other one, Zedcor, the AI-driven surveillance company, which has branched out into the U.S. Both strong revenue growth, both strong earnings growth. What do you see on the charts, Javed, and should I add to one or both or none? Thanks very much.
Okay, thank you for the question. We've got them side by side here. On the chart for, well, going back to March and the April dip. What is your take when you compare these two?
I like them both. I know Stephen Lee covers Kraken. He's our fundamental analyst at Raymond James. On the fundamental side, he covers Kraken. I think it's Steve Hansen who covers Zedcor or Fred Bastian. I believe they both like these names. Strong fundamental story, technicals are awesome, and I think we've been talking to a lot of institutional accounts about these names as well over the last couple of weeks. I'd be looking to just add on weakness here. They've had a good run, and I think there's going to be some consolidation or correction in the next, call it, month or two, and that's where I'd be looking to add exposure. So really like these names, and our fundamental analysts like them as well.
Got it. Okay, we're going to take a quick break, lighting up some more phone calls for Javed Mirza of Raymond James. We're back in a moment. Welcome back. Thanks for joining us on Market Call. Back to your phone calls. Chris on the line from Victoria in BC with a question. Hi, Chris.
Hi, Mariela. Hi, Javed. Thank you so much for taking my call. Javed, I've asked you a few months back on your thoughts on Nutrien, and I would just like to, I guess, get an update on your thoughts on that. And as well, I do own Archer Daniels Midlands as well, and I'm wondering if you would think that that is unnecessary duplication, or if, as long as they're both appropriate weights, it might be not a bad idea to hold both of those names. Thank you so much.
Okay, thank you for the question, Chris. We're pulling up Nutrien in a moment. What do you think about holding both?
Yeah, so I really like Archer Daniel Midlands. We can pull up the chart after this. I think it looks awesome. Nutrien here, I think we've been talking about this, so hopefully, Chris, we were bullish on it. Can we pull up a longer term chart, maybe 3 years? And we can kind of walk you through. So the same chart in the US would be Mosaic, but if you take a look at the longer term 3-year chart here on Nutrien, it's just been pulling back here recently. But if you take a look at the longer term chart, here it comes. Perfect. You can see we were in this bigger, longer term downtrend, and now we've started to come out of it and turn around. So if we go back to the 6-month chart, I'll just highlight kind of where we are, but you can see we've definitely put in a series of higher highs and higher lows here. And so here's the move up off the lows. We went from 66 to 84, pretty big move. Now we're doing a consolidation or correction. I think here, anywhere here, especially this area here around, call it 75, is going to be pretty important support. So I definitely don't mind nibbling and adding exposure here. This really looks like a chart or a company that has turned the corner. That's what the technicals are telling us, and is positive. Now, if we can quickly pull up a longer term chart of ADM, that's Archer Daniel Midlands. I know we've got a lot of callers too, so I'll fly through this.
3-year.
Yeah, so it's very similar setup. And so here's the bottom turning up. Really like this setup. There's some value guys that I know this ranks really highly on their metrics. So I really like that when you've got the value in the name, and then the technicals are highlighting an important inflection point. And it's funny because I was just talking to someone at the office about value traps, and this is where technicals are important because from a pure value perspective, this is going to continue to look cheaper. But this is where technicals are important because this is really telling you, hey, look, something is finally turning, right? And that's when you combine the fundamentals and technicals, that's really when things are really powerful in terms of adding to your investment decision-making process.
Got it. Let's go back to the phone lines. Joseph on the line in Montreal with a question. Hi, Joseph.
Good day. Thanks for taking my call. Javed, I want to hear your opinion on BCE. After a period of prolonged weakness, it just pierced its 200-day moving average a few days ago, and it's starting to actually look really good right now. MACD is pointing up. RSI looks good on both daily and weekly. Commodity channel is up. It's above the 200. And indeed, the entire telecom space looks like it's catching a bid right now. So I want to get your opinion on BCE. Is this one you'd invest in? And when it comes to investing right now, because we're supposed to be in a seasonally weak period for the stock market, are you inclined to invest a little bit more into something that might scream a really good buy right now? And you might have answered with some prior comments about starting to nibble right now. But for something that looks so beaten down, those finally looks like it's catching a bit. What's your take on BCE, and would you invest even a little bit right now? Thanks.
Okay, thank you for the question. BCE, I have to remind people, is the parent company of this channel under the Bell Media brand. Stock has been trending up. It was hovering around that sort of 29.30 mark for a long time.
Yeah.
Latest earnings, they talked about Ziply and sort of what is moving with that deal, and some sentiment has turned around outside on that.
Yeah.
But what do you see when you look at the trends?
So if we can take a look at the 3-year chart, and this is going to be telcos across the board, they got slammed. So what we've been telling clients is, and the last couple of times we were on here, we were talking about BCE and that it was in a negative downtrend. Turning the corner here, definitely, especially with that dividend cut, I think that helped it. The other names in the space, TELUS and Rogers, are doing well as well. So our go-to name, which was the leader to the upside, has been TELUS, and then Rogers has had a strong move as well. But what I do like is what was just alluded to is, especially if we're coming into this period of seasonal weakness, remember we talked about that beta. So these are the more defensive, boring businesses, and they're going to weather the storm. Now, like I said, we think this is a 1 to 3 month correction, so I don't mind nibbling a little bit here, but ultimately would be using the bulk of what we're putting money to work on in the more cyclical areas of the market, because we think a new bull market or 3 to 5 year, 4-year cycle is underway.
Got it. Okay, let's go back to the phone lines. Elliot is calling from Hamilton. He has a question today. What is your question, Elliot?
Good afternoon. Chubb, the insurer, is down still quite a ways from its highs, muddling around the low 270s. Where is the 200-day? Is it forming a base? I'm in at 285. I'm thinking of cutting it loose. What do you think? Thank you.
Okay, let's pull up Chubb. It is at 274 today. He's looking for the 200-day.
Yeah.
Where would you put that?
Yeah, so unfortunately, I don't know offhand right now where the 200-day is on Chubb. Bigger, longer-term uptrend. A lot of the insurance names have had really big, strong moves in line with interest rates moving higher. So we've had some moves lower here in interest rates, which affect life cos. What I would say is we're seeing this across the board. If you look at the Canadian life cos, Sun Life, Manulife, Intact, they've all come under pressure. Fairfax looks like it's rolling over here as well. Do like these stories longer term. So we'd be using weakness here. So probably around, I think this is going to be, call it around 250 to 260. I think that's ultimately where we could come back to. We're seeing Brown Brothers as well. So that ticker's BRO in the US. So this is not related to Chubb. This is insurance names broadly have come under pressure. So I still like them longer term. Longer term charts look great. We believe our technical work is telling us that interest rates are in a new secular uptrend. And if that, so yeah, exactly. Thank you for pulling up. This is another insurance name in the US. A lot of these insurance names look very similar with rates coming back down here. So bottom line is we think there's likely to be some more near-term choppiness as we get through this correction. Ultimately, if we are correct that interest rates are going higher, then I'd continue to hold and like the life goes. So I think this is going to be an opportunity over the next 1 to 2 months. So I'd hold on to my Chubb position and likely add over the next 1 or 2 months here.
Okay, we are going to take a quick break. We'll be back with Javed Mirza's last picks and see how they're doing. We're back in a moment. Welcome back to Market Call. We are going through past picks right now for Javed Mirza from October 17th, 2024. So under a year ago, at the time, Parkland was recommended, PKI on the TSX, at 35.33, now at 38.57, so 9% return, total return of 12%. For a company that has been in the spotlight quite a bit with activist investors trying to get some value for investors. Is this a stock you still like?
So when all the calls, all the picks that you guys are going to see here are from October. So at that point, we thought we were late cycle. And so you'll see, I think we had another energy name and materials play in there. Right now, our view is that we started a new cycle. So I think we're going to see more of the risk on information technology, consumer discretionary. Those are the areas of the market that I think will really perform a lot better here. I do like it, but I think it'll be more of a market perform for the next year. And then I think it'll really start to come into the spotlight, call it 2027.
So is it a situation where you're just going to hang on to what
exactly,
you have?
hang on. I wouldn't be looking to back up the truck here. Hang on, pick up the dividend. Yeah.
Got it. Let's get to your next topic, which is Gibson Energy on the TSX, GEI at 23.88 last October, and now up to 25.54, so 7% return, 12% upside. You mentioned at that point you probably picked energy. So why did you pick it again in October?
Yeah, so at that point we thought we were heading into a market peak. And it was going to be the late cycle plays that would do well. So energy, staples, a lot of inflation plays. And so we were correct that we were going late cycle. But what we weren't correct on is that we would go through that, what we call a 4-year cycle reset. It's essentially the contraction phase of the business cycle. So I'll just draw it on the screen. So this is every 3 to 5 years, the market does this. This is essentially the business cycle. And this right here, what we call the 4-year cycle reset, this typically lasts around 34 weeks. So call it 8 months. And that's what we saw in 2022. We saw the correction from January to October. Unfortunately, this year, we went through this in roughly 8 weeks. So it was really quick. And that was kind of essentially here, the period from February to June, right? So we think we started a new cycle. I like the fact Gibson's pushing out to new highs. Our fundamental analyst, Michael Barth, he likes this name a lot. So this is another name I'd hold, but I wouldn't be backing up the truck or buying a ton here.
Is that the tightest timeline you've seen?
It is. It's really tight. It reminds me of the 98 Asian financial crisis, like the currency crisis that we saw during 1998, where you had that fundamental event and the markets recovered pretty quickly.
Okay. Let's go to your third pick from October of last year. West Fraser Timber, 134.69 recommended, WFG on the TSX, now at 102.24. 24% drop return, total return down for 23%. Is this affected by tariffs at this point? What are you seeing happening for West Fraser?
Yeah, so if we pull up the chart of West Fraser, I think I can kind of walk through it. I'll walk through our rationale why we recommended it and where we stand on it right here, right now. So what I would highlight here is, so that was our view, I think, where was it? Back in October. It had started to pick up, but since then, this was, in our view, the market peak where it did pretty well. And there's typically a trade that our lumber analyst, Daryl Swetlishoff, highlights, which is buy it in October, buy it at Halloween, I think, and then sell it at the Super Bowl. So usually there's a really nice seasonal trade from October to January. But as you can see, this was the tariff impact, and since then it's kind of moved sideways. It is starting to try and form a base here. So I don't mind adding here a little bit, but the only problem is, if we're correct on our call and where we are in the cycle, I don't think lumber really starts to pick up until next year. So for us, this was just a bit of a stinker of a call, unfortunately.
Got it. Okay, we are going to take a quick break. We're going to be back with more of your phone calls for Javed in a moment. Stay tuned. Welcome back. Daniel has been holding on to the line. He's in Markham, Ontario. He's got a question for Javed today. Hi, Daniel.
Hi, Mariela. Hi, Javed. May I have your technical analysis on Tamarack Valley? What are some entry points to buy and add? And what are some other energy names on your radar that interest you? And also, Javed, one of the best technical analysts on Market Call, and Mariela, great host.
Thank you very much. So let's pull up Tamarack Valley and have a look at the fundamentals here. For the 3-year, I guess is what we pulled up first. It's up 25%. What are you looking at when you look at this chart?
Yeah, so we're looking at the longer term trends here. You can see we've put in a major low here in 24. We've got a higher low, higher high. So really like the setup. This is actually one of the names we highlighted at the start of the year as one of our top picks. Other name in this space would be IPCO and Athabasca. So like these smaller cap energy names, a lot of them are coming to life. So given our view, I think where we are in the cycle, I wouldn't be adding too aggressively to them here, but I do like them. And if we're correct on our longer term call, we're very bullish Canada longer term. I think we talked about that a lot in our last segment. Then energy should definitely participate in the energy plays. So
got it.
I like it. Yep.
Let's go to Ernie from Nanaimo, BC. He's got a question. Hi, Ernie.
Hello. I have Citibank, and it's done well over the last 2 years, but I'm wondering if I should trim it. And do you think U.S. banks will continue to do well?
Okay.
Thank you.
Thank you for the question. You talked about consolidation in some sectors. What do you can you reiterate what you see for financials and tell me if you see Citigroup in that space as well?
100%. So Ernie, it depends how fancy you want to get. So if he wants to, and it's funny because I was talking to over the last couple of weeks, we've been out visiting institutional accounts and we've been having the exact same question on the Canadian banks. They've been up on a stick. They've done really well. TD is especially one that's come up a fair bit because it's literally up on a stick. I don't mind trimming a little bit here. I do like the story longer term. It's just they've had such a good run. So I do like these financials longer term, especially the U.S. banks. But I do think that, I'm not sure what the catalyst will be, but I think there's going to be some sort of catalyst in the next couple of weeks. And just the way the market is extended here, that I wouldn't be surprised if we get a pullback. So I think it's trading at this 94 level. You can see this is big support here around the low 80s. Would not be surprised if we had a 5 to 10% correction here in Citigroup and just the other names as well, Goldman Sachs, Morgan Stanley. And so if we're correct, the financials should continue to work into the second half of 2027, first half of 2028. So Ernie, what I would say is if you don't want to be too tactical, just hold this and let this run into 2027. If you do want to be a little bit tactical, you can trim a little bit, a couple of percent, and then look to add it back on weakness.
So that's a pretty big correction if we get to that. Can you give me an idea of something that would trigger that, maybe something historically that would have triggered something like that?
Yeah, it could be some sort of legislation that they're trying to bring in, or it could be that, well, as we get down the road, something happens with tariffs or there's some other kind of legislative impact, or we get some sort of financially related event, or we get some sort of geopolitical crisis that ends up affecting the prices of commodities like oil in global markets. All of those could shock markets and see them come under pressure here. The other thing is August is typically pretty low it's high volatility, but it's pretty low volume. So a lot of people are on vacation, taking time off. So this is the time typically when there's low liquidity. And if there's low liquidity, it means moves can get exaggerated. So I always like to be the one making the decision as being forced to make the decision. So I'd rather trim a little bit here as opposed to being forced to trim. But if Ernie just was looking longer term, then I would leave it as is and then ride it out to 2027.
Got it. Okay, let's go to Paul from Orangeville with his question. Hi, Paul.
Yes, energy fuel. Recently has been going up and has gone parabolic in the past month. They just secured a contract for their rare earth minerals. What does he think about that? And if you can take a look at the uranium chart, both the spot and the future prices, and what does he think about the prices of uranium, even with the coming up meeting or whatever is going to happen on Friday?
Okay, thank you for the question. Uranium has benefited from the push towards energy in general and the sort of sucking up of energy by AI. Let's pull up energy fuels and specifically, wow, look at that spike.
Yeah, so we were highlighting Cameco to clients, I think, back around here. And then I think we took the trade-off around here somewhere. This is where it gets kind of sticky. We have our individual market view or individual stock level view, and then we have our broader market view. So I don't know if we can pull up URA. It's an ETF that is related to uranium stocks, and that will give you a better picture of where these stocks in general are. It's just a basket of uranium names.
Okay, so URA I have at 38.85, and we're trying to get the chart, but we don't have it right now. URA is a basket, so less fluctuation. Is that what we would expect?
Okay, so maybe we can pull up Cameco, ticker CCO. Cameco is kind of the bellwether, and it's a big part of URA. So within the uranium space, so here you can see that same move we had up in EFR, but notice it's starting to stall out a bit. So this could either be a consolidation in price sideways, in time, or it could be a consolidation in price. And you can see here important supports around this, call it 80, 85 level. So that's a 10-15% correction, right, on the uranium names. They've had a big move, and that's kind of where we stand. We haven't really been talking about them too much with clients recently because we like them here. This was the kind of the sweet spot. We're usually trying to capture the middle of the move, and now this is where it's a little bit more like flipping coins. I do like the chart longer term, but to put on a big position right here, right now, I'd feel a lot more nervous about, especially given our view that we think correction is coming in the next 1 to 3 months.
Got it. Okay. Do we have time for another caller here? That was Paul. We're going to move on to Jabriel. When we come back, we're going to take a quick break. Stay tuned. Welcome back. We want to move on to Jabriel, who's calling from Scarborough, Ontario, with his comparison question. Hi, Jabriel.
I just want to start by saying Mirza Javed is the GOAT. Okay. My question is, the question is, Bank of Montreal, which just broke past its all-time resistance high in 2022, versus Enbridge, that broke past its all-time high today. The resistance line was like 10 years back. Yeah. Your thoughts?
Okay.
Thank you for that.
I'll send you
the check. I'll send you the check. Check's in the mail.
Yeah.
So, Jabriel, what I would say is actually it's funny because this is what we have been talking to some accounts about, specifically Dean the Dream, and basically just highlighting that BMO and the banks are getting kind of extended, but it looks like the pipelines are reaccelerating. So it's Enbridge and TRAP are reaccelerating here. So given our view and what we've been talking about, this potential correction here, I don't mind rotating a little bit out of BMO and putting some to work in Enbridge. I really like that breakout here. TRAP has been following suit. So definitely showing signs of some rotation. And I think it's more defensive related, not energy related. But what I would say is we look at the commitment to trader data, which comes out of the Chicago Board of Trade every Friday at 3:30. And what I would highlight there is it looks at commercial hedgers, which is producers. That's typically the smart money. And then there's hedge funds is the other side of the trade. And commercial hedgers have been actually buying or adding. They've been hedging crude less, which effectively means they're going a little bit longer. So something interesting is happening there, and that always kind of piques our interest. So yeah, I like that trade.
Got it. Okay, let's go back to the phone lines. Gordon's in Victoria today. Hi, Gordon.
Good morning. Brookfield Renewables recently announced a big multi-year deal with a tech giant, the second such deal this year. The stock popped. It maintained for more than a few days. But then abruptly retraced and is now driven lower than the starting point. Doesn't seem to be sector specific. What are your thoughts?
Okay, can I get your sector look for renewables in general?
Yeah, so I'm trying to think which ETF covers it. I know like we'd be looking at NPI, Algonquin. If we can pull up maybe NPI or Algonquin, either of those charts, I can kind of walk you guys through this.
Do we have those charts?
Yeah. either NPI or Algonquin. They're going to kind of tell us the same story.
Okay, so what are you seeing in the space?
So we are seeing signs of improvement, and so here's this bigger downtrend, especially in Algonquin. It is starting to improve. Both of these names have moved above their 200-day or 40-week moving average. That's positive. It's especially positive because a lot more quant funds are moving money in the markets, and that's one of the triggers that they use to look at is it above this technical level? Because if it is above it, they can buy it. Otherwise, they can't buy it or they short it. So we are seeing signs of improvement. If I was much more cautious on markets, I'd be much more bullish on these. We have recently recommended, I think it was Fortis and Hydro One. So I do like the regular utilities, Emera, CU, CPX has been doing well as well. So these are more of a value play. Technically, they've been laggards, so I'm not a big, you can tell, I'm not a big fan. Same with BEP. It's been, I know it has been trying to turn around, but it's been locked in this kind of sideways trading range. I think there's better places to put your money to work.
Got it. Okay, Gordon, I hope that helps you out. We're going to move on to Matt, calling from Vancouver Island. Hi, Matt.
Hi there. I appreciate you taking my call. I'm just calling about Propel Holdings. I bought in at about 26. I really like the company. Then I pictured them having a longer runway up. I'm concerned they're rolling over now. I'm just wondering if I should dump it or just wait it out.
Okay, thank you for the question. Let's go to Propel. And, it depends. The view of the economy has changed, right? The blow has not been as hard as many as expected from tariffs. It's kind of been coming in smaller waves. Propel, I think, when we talked about it last, might have been looking at a sharper downturn, which it would benefit from. What do you see now?
Yeah, so look, I like this longer term chart. I think our fundamental analyst, Steve Boland, covers it. I believe he likes it as well. What I would highlight is we're right near that first support level around 30, and then we've got major support around 20. So Matt, to your question, I don't know how aggressive you are in terms of your positioning. So if you are concerned here, I don't mind reducing a little bit, walk and letting the market kind of go through this corrective phase and then looking to add back. We do believe there's another 2 years of upside left in this cyclical bull that we're in. If that is the case, Propel should continue to run. It's, it benefits from the economy doing well. And so I definitely don't mind adding exposure. I think the 20 level, though, is key. If we come back to that level, that's where I'd really be looking to kind of back up the truck and add exposure. However, if we do move below that, then that would be indicative of what Matt was concerned about, that something bigger is happening with the company. But right now, we think this pullback is same thing we saw in Chubb and a variety of other names. We think this is more in Constellation Software, where some of the leaders have started to roll over. And this is just, in our view, a red flag or a tell that there's more downside coming broadly in the market.
Okay, let's go to Imran in Ottawa with a question. Imran, how are you today?
Oh, thanks. Thanks for taking my call, Mariela. I'd like to ask Javed about an Eco Eagle. I bought it a few weeks back, and it has gone up, but now it's just starting to head down. And I'm wondering if it's time to just hold on to it, buy some more, or take it off the table. I like his technical analysis on it. I really appreciate the call.
Let's have a look at Agnico trending up 236 over the last 3 years. Where are you going with this?
This is the go-to name along with Lundin Gold here in Canada in the gold space. Rockstar stock, looks awesome. The only thing I would highlight is, can we pull up the 6-month daily chart or 6-month chart? Perfect. So just to kind of give viewers a background, as part of our work, we highlight entry points, exit points in terms of doing overweight, underweight. So I think we highlighted one back at the start of the year, and then we trimmed it here, highlighted one, a long entry point here, trimmed it around here somewhere. And for most of this period here, we've been quite cautious. We actually highlighted, I think, reduce ideas here and here. So we were wrong on this big gap up here. But the rationale that I'll talk to people about why we're cautious on the golds here is we started to see some selling pressure underneath the surface. But importantly, and I'm not sure if you can pull this up, but seasonality as we get through September, October is really weak for the gold stocks. So that's the thing, is I don't really want to be adding a lot of exposure right here, knowing that there's going to be seasonal weakness in the next 2 months. So it really picks up from November to April, and that is where I'd really look to start buying, is call it in October. So if you don't own any gold exposure, I think this is the go-to name, but I think there's going to be more weakness coming. This looks, I think probably this is pretty good support here, call it around the 172.50 level ballpark, and that's where I'd prefer to be looking to step in and add exposure.
Got it. Okay, we are going to leave it there for this block. That's all the time we have for emails and phone calls, but new picks from Javed when we come back. Stay tuned. Join us tomorrow for Market Call. Ryan Bushell will be on the show. He's president and portfolio manager at New Haven Asset Management. He'll take your questions on Canadian dividend stocks. That's tomorrow on Market Call. Time now for new top picks from Javed Mirza. His first one is CT Real Estate Investment Trust, which is on the TSX and has a number of different positions here in real estate, including retail centers and distribution centers. Why do you like CT moving forward?
Yeah, so I was talking to our fundamental REIT analyst, Brad Sturgis, and kind of walked him. He knows our view that we're cautious on markets here over the next 1 to 3 months. We talked about a variety of names in his coverage universe. I like it technically. You can see it's pushing higher here. We've got a series of higher lows, higher highs. Looks like it wants to break out here. And in our discussion, he mentioned, like, if you want something, if you think we're heading into a bit of a defensive environment, which we are, then this is going to work like a bond, which is what I want. So this is, to me, a little bit of a protection, a little bit of a defensive pick. This is a boring pick, but I think it'll protect capital and spit out dividends. So that's why we're recommending it here.
Okay, let's go to your second pick then, which is CES Energy Solutions on the TSX. What do you like about CES? What are they into?
Yeah, so they do waste and a variety of different things on the energy space. What our fundamental analyst, Michael Barth, he likes this one a lot. And so we've had a 60% correction here from peak to trough. And we just moved above the 200-day. We're starting to see volume increase here. So this is kind of a little bit of a hedge if energy does move or if we see more of a movement there. Also, remember we were talking about Zedcor and Kraken, so a lot of these smaller cap names. I think if we're correct, we're starting a new cycle. This is the time to be adding small caps in anticipation of a bigger move. I do know that we're expecting some sort of pullback here, but I think if we're correct, ultimately we should see this stock break out to new highs if we're in a new cycle. So we're at 775. That gives you roughly, call it 20 to 25% upside from here.
Smaller caps generally been ignored for the first part of the year?
Yeah.
And you think now's the place to go if there's a correction sort of widely coming?
Yeah. So if a correction is coming, so obviously, when we come on the show, we're asked as of right here, right now, but this is a name that I'd prefer to add on weakness.
Got it. Yeah. Okay, let's get to your last topic then, which is Capstone Copper, which is interesting because it also is getting caught up in the tariff scenario from Donald Trump. Why specifically Capstone, and if you could give me a sort of a wider outlook on copper?
So I was going to go the other way. We'll start with copper, and that's exactly, you read my mind. So what we're looking at is if we can pull up copper, a longer-term chart, if we have it. But this is one of the factors or reasons why we think we're starting a new cycle, because we saw both silver and copper break out to new highs. They are both cyclical commodities. So if we're seeing the cyclical commodities break out to new highs, and of course we did have that big correction after Trump announced the tariffs, but if we are seeing that happen, then we should see copper continue to work essentially through into 2027. So we like the setup here. So here you can see this is copper. We broke out. This is what really reinforced our view that we're starting a new cycle. We broke out to new highs. Here was the Trump tariff announcement, but you can see we've had that really big pullback. And ultimately, we think if we're correct, we're starting a new cycle. We're going to grind higher. Now, if you pull up that longer-term chart of Capstone that we just had up as well, a 5-year or 3-year, you can see the same thing. So it's essentially beginning a bigger move. Politically, it's in, I just spoke to our fundamental analyst, Judith Elliott, who has it rated outperform. So here's the bigger low during the 4-year cycle reset that we saw in 2022. Here is the low that we saw during the 4-year cycle reset here in 2025. So ultimately, if we're correct, we're starting a new cycle, then it should have similar upside from what we saw in the last 4-year cycle from 2023 all the way to 2025. So we think we have upside out into 2027. It's at 920. I think the recent highs here were around 11. So this is another name that should give us 20 to 30% upside over the course of the next year, year and a half.
Very quickly, so you should expect the same in silver. You said it's also breaking out?
Yes.
And should people look into silver stocks if that's the way they want to go?
Yeah, so I do like, and so silver and copper are the ones that have industrial uses, and they should benefit from a strengthening economy, which is what we think is going to happen. We've already seen a pretty big run in silver, and I'm cautious on gold here. So I'd wait on both of those until we get through the seasonal period of weakness. So when we're on next, probably November, is when we'd be much more constructive on silver.
Got it. Javed, thanks for joining us as always. That is it for Market Call today. Thank you for joining us. We'll see you again tomorrow.